Happy Monday, everyone, and happy November. It's your friend Ryan Rolfe with the Dsmsold team at Keller Williams Legacy Group here in Des Moines in Central Iowa. And it's Monday. It's time for another episode of Monday Market Update as we move into November. So this week we're talking about kind of the end of month recap and what we're seeing in the real estate market. So first and foremost, if you're somebody that's been watching interest rates, you'll notice that those have been climbing in October. They had been, prior to the Federal Reserve lowering their base rate, rates had actually been coming down, and we got almost to 6%, some even a little bit under 6%, and now we're back about at that 6.5, 6.75. You might even see some as high as 7%. And Tuesday is election day, so we'll find out. That sometimes has an impact on interest rates, and in the following week, so we'll see what that has for us as well. But let's talk about what is happening in the real estate market and what that means for you. So this weekend, just looking over the last few years, we noticed, and this is a lot of this, as I again have mentioned in previous episodes, this is based on data from Les Solgrove with Simply Des Moines Real Estate Stats. He's part of No Coast MLS. He's the director there, and he is a real estate agent or former real estate agent in the Des Moines Metro. So he's our resident statistician and does a great job. So thank you, Les, for always all of the great information. But the last few years, one of the things that Les pointed out was that interest rates in the October and November season, there has been a trend the last 3 years that they've gone up instead of down. So, a lot of that depends on the market. 2022, that's when we were rates were going up just from the lows that they had been early on in the year. 2023, they kind of went up, and then we saw a little bit of a tail off, and then now, compared to last year, they've gone up as well. So we might see that they come down in November and December into January. Time will tell, of course, on that. The most inventory that our market has overall is around $300,000 to $400,000 price point. That's where the most inventory is available. And then the second most is in that $200,000 to $300,000. There's been more sales overall in the $200,000 to $300,000 than the $300,000 to $400,000. Again, a lot of that based on interest rates. When interest rates go up, purchasing power goes down, and when interest rates are lower, purchasing power goes up. So if we look at the market overall, the $300,000 to $500,000 price point is considered a balanced market. So it equally favors buyers and sellers. Below $300,000, we are in a seller's market still. So that means we've got less than 4 months of inventory. And then the lower you go in those price points, the less inventory available there is. So it'll probably be a good amount of time, I would say, before we see, that $200,000 to $300,000, if ever, in the buyer's market or even in an even market, because of course an even market comes before a buyer's market. And then above $500,000, most everything is in a buyer's market. There's a few that are in a balanced market, but most everything is in a buyer's market. And as you go up in price, again, that buyer's market, the amount of months of inventory based on sales data goes higher and higher. So again, that $300,000 to $400,000 price point, that's been one of the most consistent at adding inventory, and also homes going under contract. $200,000 to $300,000 is next, and then below that, we could always use more inventory in those lower price points for first-time buyers. First home, those types of properties. As we've noticed that prices, of course, if you've been watching them, have gone up over the past couple of years. Price reductions, though. Speaking of pricing, that price reductions are on the rise, and that's really been consistent throughout the year this year. So more price reductions overall. If we look at data for listing prices and pending prices and even sale prices, those are trending down from earlier in the year and from last year. So again, as a seller, that means we need to stand out, really focus on how we're standing out against our competition. And one of the things that you may hear me mention if we meet is, hey, let's price ahead of the market. Because if we're pricing ahead of the market, we're looking at our competition, other homes that have gone pending or sold, and really focusing on the sold data plus what's active on the market that we're competing against, and we're pricing a little bit ahead of those. That's going to help us move quicker and likely have to reduce the price less, if at all. So that's a helpful tip for you if you're thinking about selling. And if you're buying, you've got some great opportunities now even as we head into the end of the year. As always, moving into the end of the year, you've got serious buyers and serious sellers. Folks want to get homes under contract before the end of the year. And, sellers that are selling, they have got a reason to sell right now. So they're not just selling because, oh, hey, I think now is a great time to put my home on the market. They've got a reason for selling. They're, moving out of state or moving to a different location, so on and so forth. So this weekend, we saw 136 new homes come on the market. 98 homes went into pending or under contract status, and 158 homes sold and closed. We're still teetering in about that 3,950-ish homes. I don't think anymore, as Les mentioned as well, because typically we see a downtrend of homes coming on the market. So if pendings go way down, then we might see us hit that 4,000 homes on the market number, but likely, hopefully early into next year, we may see that, which again, the more homes that we have on the market makes it easier for both buyers and sellers. And then rates, of course, is the next thing. So if you've got questions about what all of this means for you, if you're thinking about buying or selling now, or maybe even into the new year, feel free to reach out. Always happy to answer any questions you have. Thanks everyone for watching, and we'll see you next week. Bye.